Look at the top-line numbers in 2026, and the American economy looks indestructible. Retail sales are accelerating toward $5.6 trillion. The S&P 500 is in the middle of a record-breaking run, and collective household net worth has hit a historic $184.1 trillion. But those shiny national figures are sitting on top of a very different set of fundamentals. Inflation remains sticky at over 3%, job growth was cooling, and interest rates are being held at punishingly high levels. In any traditional economic model, these headwinds should be crushing consumer demand. Yet, as we move through 2026, retail spending isn't just holding steady, it's actually accelerating. This chart shows what economists are calling the Great Decoupling. It's an unnatural divergence where consumer behavior has completely detached from the indicators of actual economic health. This divergence suggests that the national data is masking an illusion. While the aggregate numbers look healthy, the math implies that a unified economic boom has been replaced by a system where high-volume spending in one specific group is hiding the financial strain felt by everyone else. To find the truth behind the $5.6 trillion retail figure, we have to look past the national averages and sever the data in half. The first half of the story is driven by a powerful wealth effect. Households in the top 20% are currently insulated by that $184 trillion cushion in assets. When the value of stocks and real estate surges, these households feel wealthier and spend more, regardless of what's happening with inflation or interest rates. This insulated group is now singularly responsible for driving more than 60% of all consumer spending in the country. Their spending is also being fueled by the OBBA, the massive tax overhaul passed in 2025. Because of how the bill was implemented, employers spent all of 2025 withholding taxes at the old, higher rates. This mistake has resulted in a massive $150 billion injection of lump sum tax refunds hitting affluent bank accounts in early 2026. This sudden liquidity is driving a behavior called front-loading. Households are rushing to purchase luxury goods and big-ticket items now, trying to beat a new round of heavy tariffs scheduled to take effect in late April. For the top 20, while the wealthy received thousands in tax refunds, the bottom tier of the country saw an average benefit from the OBBAA tax cuts of exactly $9. That tiny benefit is being obliterated by the cost of living. Sticky inflation on groceries and housing, combined with rising energy prices, is devouring the stagnant wages of the bottom 40%, pushing their arm of the K further into the red. This pressure has given rise to the viral No Buy 2026 movement. The movement functions as a survival mechanism of extreme austerity. Families are locking away credit cards, canceling all non-essential subscriptions, and cutting basic comforts just to ensure they can pay for rent and utilities. Corporate America is already reacting to this shift. While mid-tier retailers struggle, warehouse stores are seeing a surge in memberships as families buy basic essentials in bulk just to lower their unit costs. For nearly half the country, the booming 2026 economy is actually a financial cage, forcing millions into a state of permanent financial famine. This split in the economy has created a systemic trap for the Federal Reserve. The Fed's primary tool to fight inflation is high interest rates, but those rates are failing to slow down the top tier of spenders because their $184 trillion wealth cushion makes them indifferent to the cost of borrowing. Tragically, those same high rates are exclusively crushing the lower 40%, who are now facing record-high credit card interest and debt servicing costs just to keep their households running. This spending illusion is about to hit three major hangovers. First, the one-time boost from the OBBA tax refunds will run dry by the summer. Second, the personal savings rate has plummeted to just 3.5%. Americans have exhausted their cash buffers, leaving the system with no margin for error if the labor market continues to soften. Finally, the front-loading we're seeing now means that future demand has been pulled into the present. Once the new tariffs hit, companies will likely be left with a massive inventory glut and a consumer base that has nothing left to spend. The Great Decoupling is an unsustainable imbalance. While the top of the economy feasts on asset gains and the bottom faces extreme austerity, the entire system is resting on a very fragile foundation.